Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started. Welcome back to this week's episode of the Lady Landlords podcast. Today, we have an expert in 1031 exchanges joining us. So Margo McDonnell from 1031 Corp is here to walk us through that whole process about 1031. So Margo, thanks for joining us. How are you today?
I'm great, Becky. Thanks for having me. I'm looking forward to this.
Of course. I'm so happy that I also have another woman that's on the show to discuss that. But I would love if you could just start by introducing yourself to our community a little bit.
Sure, Becky, happy to do that. So it's hard not to separate my personal life from my work life, but I have, coming up on my 30, sorry, Becky, I totally butchered this, but
okay.
I am coming up on my 25th wedding anniversary with my husband and proud girl mom, 3 daughters, 2 in college, 1 in high school, have done the soccer mom thing for many years, but was thrilled when they found volleyball because, they play that inside, there are bathrooms, it's not snowing inside. So it's an awesome thing. And during COVID, I decided that I was going to go back to school and got my MBA.
Oh, really? Congratulations.
Thank you.
Well done. Way to use that time. What was it about during that time, during the pandemic, that made you decide to go back for the MBA? Was it that you just had more time and space to get into that, or what was it?
Ironically, the exact opposite happened. I decided during the summer of 2020 that I would enroll in an executive MBA program. It was a 19-month program. I thought, okay, this is great. Business has actually slowed down a little bit as a result of the pandemic. And then the program started in September of 2020, at the same time that the real estate market went crazy, and our business doubled during that time. And it all still feels like a blur. And I'm not quite sure how it all happened, but it all worked out great.
Good. No, and way to take that on. And you're right. Adding anybody that was working within real estate in whatever capacity that might be in the past 2 years to take on anything extra besides dealing with what was going on with the market, I am absolutely impressed by. So kudos to you and congratulations on the MBA.
Thank you.
That's great.
Thank you. I actually graduated with my oldest daughter's friends that she went to kindergarten with. So.
Oh, that's so sweet. I'm sure that made for probably some really cool pictures too.
Yeah, it's very interesting for sure.
Good. Well, congrats.
Thank you.
So why don't we start with just simple question of what do you do now in real estate?
Sure. So I work as a qualified intermediary, or QI. And I know that's a mouthful, but we are an independent party that's involved in the 1031 exchange process. So the tax code says if you want to do a 1031 exchange, you need to use a middleman to facilitate that and really to hold your hand through the whole process. So it's easy for you to take advantage of 1031. And that's what I do. And I've actually been doing that for almost 29 years. And it's been really fun during that time to watch, well, of course, the company grow, but people's knowledge of 1031 grow. When I started doing this back in 1994, people thought, especially here on the East Coast, what is a 1031 exchange? While it was a very common practice on the West Coast, it took a little bit of time for it to catch on here on the East Coast. But we're there, and we do a lot of exchanges on both sides of the coast.
So 2 questions within this. First, can you please explain what a 1031 exchange is? Let's start there for our listeners.
Sure. A 1031 exchange gets its name from Section 1031 of the Internal Revenue Code, and it provides that no gain or loss will be recognized on the sale of a business use or investment property, followed by the purchase of another one. So simply put, if you are selling a rental property, you can utilize a 1031 exchange to defer the gain and roll that all into your next property. So it's a way for you to reinvest all the equity that you would have paid to IRS, reinvest that all into your next property. So you're really buying it with pre-tax dollars.
Gotcha. Thank you. Now, here's a question. Why do you think it was so popular on the West Coast compared to over here on the East Coast?
Well, 1031s have been part of the tax code since 1921, so for
Hmm.
101 years now. But they were just more commonplace. And I think most tax strategies tend to be more popular on the West Coast and make their way across the country. Um, and remember, we didn't have the internet the way we do today, and people can't Google everything the way that we do today. So it was a lot of education, and there just simply weren't as many facilitators or qualified intermediaries on the East Coast. And then back in 1978, there was a landmark case. We call it the Starker case, but it was the first one that really made 1031 a little easier to do, and led the path to making it easier to do, and created a lot of buzz around 1031 exchanges. And that Starker case involved an Oregon transaction.
Okay. So it sounds like then, once again, the way that information was disseminating, it was definitely more of that West Coast thing, and then finally made it over here to us.
Correct. Correct.
Okay. Interesting. Now, is working with 1031 exchanges what you've always done in real estate, or did you start in real estate in a different capacity?
I did not do anything related to this prior to joining the company I'm with in 1994. Actually worked for an ice cream franchise chain, and my kids laugh at me, but I answered a classified ad in the local newspaper that
Mhm.
talked about using your management and sales skills, and applied to be a salesperson for this company. And I remember going to the free library in Philadelphia after my first interview, because I was going to prep for the second one and look up as much as I can about 1031 exchanges. And we used, the Dewey Decimal System, and we pulled out all the client
Mhm.
catalogs, and the librarians could not help me find anything on this. So
Wow.
that goes back to how hard it was to really find out about 1031 exchanges. So have been doing this for almost 29 years now.
Wow. That's really interesting that you found such a small segment within real estate investing or real estate that was your introduction really to this world. And it wasn't you were a realtor, you then were interested in mortgages. Now all of a sudden you decided to move into this section. This was the place you started and the place now you are almost 30 years later.
Yes, but a lot has happened during that time. When I first came on board, we were, a new affiliate of a regional title company.
Hmm.
We might have had 100 employees, 75 employees. And then, 10 years into that, we were acquired by a national title underwriter, and worked with them for a number of years. And then in 2010, we had the opportunity to take the company back, and now we're an independent. So we have the benefit of knowing what it was like to be part of that regional company and how things worked, and being part of that national company. And despite them being a great company, we know that when you're part of a big Fortune 500 company, you sometimes have to make decisions for different reasons. It's about stock values and shareholder values, and more of a one size fits all way of making decisions. So
Hmm.
as an independent, we get to benefit from all of that and make decisions because they make sense for the client experience, for our team, and just to build a better company.
Right. So I'm sure that there's been a ton of changes within the industry that you've seen over 30 years within real estate investing. Can you share about what that was like and what changes you've
Sure.
noticed?
Sure. I would say that Section 1031 of the tax code hasn't changed that much. However, what has really changed is just the knowledge of 1031 and
Hmm.
how it's been used. You know, 15 years ago, transactions were simple. You were selling a duplex at 123 Main Street and buying one, on the other side of town for about the same price. But we see people that are more knowledgeable in 1031 getting more creative with things, such as trying to build a new property on land you already own. And I don't want to simplify that process because that's really complicated, but there's a way to make that happen. And there's just so much more expertise. And it's been fun to not only grow my knowledge of 1031, but to see how its use has expanded so much and see people be able to really use its power to not just build their own wealth, but just to make positive changes in the community. For example, right in my backyard, we had a farmer sold land to a YMCA. They built the YMCA there, and they improved all the roads around it. They created jobs, and think about, the excellent resources to the local community. The shopping center up the street that brought in more tax revenue, created hundreds and hundreds of jobs. So it's been fun to see the use of 1031 grow exponentially and the positive impact of that, not just on the investors, but the communities we all live in and the US economy.
Right. That's really cool. I actually did not. I'd like to dive into some of those creative strategies that you've kind of seen
Sure.
in a minute or two. Now, since you've been in the real estate industry for 30 years, and since we are a women's organization called Lady Landlords, I would love to hear about what changes you have or have not noticed with women in the industry over those really almost 3 decades.
For sure. So when I first got into this industry and would go to, especially a commercial realtor event, there were not many women at those events. And I think it was hard to establish trust and credibility. And I'm a big believer in the way to do that is demonstrate your expertise. Know your fields, be really good at it, and be willing to share that with others. But it's been nice to see the number of women involved in these different associations increase. It's been interesting to see women get a seat at those tables and be members of those boards and be the educator, be the person that people, are asking questions to. And it's been especially nice to see groups like this that are really focused on empowering women. And, it sounds like a cliche. I actually have a little sticker sitting here that I bought for my 3 daughters for International Women's Day. And this was mine, and, empowered women, empower women. And,
Right.
nothing is truer.
No, I think that's great. Honestly, that is very much what we do over at Lady Landlords. So I'm very excited to see that really your company ethos and kind of what you've noticed is it really kind of matches with what we do.
Absolutely. Absolutely. And I have to share that we have 30 employees, where we have an office in Pennsylvania, right outside of Philadelphia, and we have one in Central Oregon. And we have a couple of employees scattered across the country. But of those 30 employees, we have 28 women, most of which are, working moms. And, we've all know what it's like to be the mom. The kid comes home and says, Mom, they had a party at school and all the other moms were there. They brought cupcakes, and how come you can't go? And I really made this decision when we bought the company in 2010 that we wanted to be the employer that made sure that women got to do both. Because
Aw,
if I get to go to my kid's first soccer game after school, or that, donuts with mom because it's Mother's Day, then I'm going to be a much better employee because I'm at peace with my decision. And I've got to do the mom thing. That really makes me feel good. But I also got to, go to work and do a great job there too.
that's great. And I feel like that's a big help from like also an employee retention place. I think a lot of people, especially now through the pandemic, I know once again, your company's been around a lot longer, but I feel like people are shifting more towards companies that understand that we have things going on in our lives that are outside of a
Sure.
work day. And the companies that really can adapt to that and can understand that are the ones that I think that employees are happier at. And I think that there's probably lower turnover. So
Absolutely. And I
that's
think
really cool
it
to hear.
creates great camaraderie. And I always joke and say that our team is just as loyal to each other as they are to the company.
Right. Oh, that's beautiful.
Thanks.
But all right, back to facts on 1031 exchanges now. So, okay. So as a 1031 really is going to allow me as that investor, if I'm selling my property, to be able to say, I want to sell this property, but instead of selling it, paying the taxes on it for that sale, and then now going and buying another property, it allows me to kind of defer what those taxes would be. So I can just kind of take that money from that sale and roll that into a new property, correct?
That's exactly right. And it's not just the capital gains that you're deferring, because if we're an individual in a state or a trust with a modified gross annual income exceeding 200,000 as a single person, or 250 if you're married filing jointly, there's a net investment income tax that's a 3.8% surcharge on all of your unearned income. And I'm sure you all know this because it's on your rental income, your capital gains, dividends, interest. So if you're looking at 15 to 20% capital gains, and then you have your 3.8% net investment income tax on top of that, and don't forget your depreciation recapture at 25%, and your state income tax, which depending on where you live could be anywhere from 0 to almost 13%. So when you add all of those taxes, you could see the power of 1031, because rather than paying that now, all of that money goes into your new property.
Right. So one of the other then big misnomers I feel like within a 1031 exchange is that I have to, whatever property I'm selling, I have to buy a very similar property in order to be able to defer those tax benefits. But really what I'm hearing you say today is that that's not necessarily the case anymore.
Right. So the 1031 exchanges are referred to as like-kind exchanges by the IRS and members of Congress, and even probably your accountant. But like-kind refers to the use of the property, not the specific type of property. So you can sell vacant land and buy a single family rental that is going to generate some cash flow for you. Or you could sell 3 townhomes that you've acquired to buy an industrial building. You have that flexibility. And because it's part of the federal tax code, you can buy and sell anywhere in the US. So it gives you the opportunity to diversify not just the type of property, but also the location of those properties. And you could get super creative. And let's say you're thinking about retirement, and you're trying to think where you're going to retire, and you think Arizona is it. While it's hot, it's really good. It's not as humid. And you think, I want to sell my rental property that I have in New York State or in Kentucky or wherever it is, and buy a rental property in Arizona. Well, the rules say after 2 years of using it as a rental, you can convert it into a second home or a primary residence. And that way you've acquired your retirement home, and then you sell that house you have in New York State. And because you've lived in it for at least 2 of the last 5 years, as a single taxpayer, you're entitled to a 200 and up to deferring up to, I'm sorry, avoiding or eliminating up to $250,000 of gain if you're single, 500 if you're married filing jointly. So the more you know about 1031, the more you can use it in other ways. While most people think, I'm going to do a 1031 to avoid paying the taxes right now or defer the taxes, but the more they know about it, the more they can use it to accomplish other investment objectives.
Now, in order to, besides this podcast episode, clearly, what is the best way for people to really learn about the opportunities and what they can and cannot do within 1031 exchanges? I can Google, but it sounds like I probably need a little more help with my specific situation on how to get that information.
Sure. Well, someone could always call me or a member of our exchange team. Our number is 800-828-1031. And
that's perfect.
That's the advantage of being in the industry for so long. You were able to get all of those numbers, but you could call, and a member of our exchange team could not just explain the 1031 requirements, but also talk about your transaction and help you see if this may be something that's good for you. Of course, it's important to always talk to your tax advisor, because he or she will know your whole tax picture. We can answer all the questions about this particular property, but we don't know what else you have going on, and they're going to help you decide, whether or not 1031 is really the right way to go. But whenever someone is selling a property that's been held for business use or investment, they should at least look into whether or not this works for them.
Right. So really, when it's like a like property, it really means more of like a like use. So does that get
Yes.
broken into residential stays residential, commercial stays residential, or can you cross between those?
Absolutely. We see it all the time. Someone sells a single family rental property, which is the most frequently exchanged type of property, to buy something that's their first commercial property.
Oh, great.
Yeah.
Okay. So now here I am as an investor. I'm ready to sell one of my rental properties. At what stage? Well, we already kind of addressed as soon as I'm kind of starting to think about selling, I should really get in touch then with not only my accountant, but an intermediary to kind of learn about what I can and cannot do
Right.
and get that information up front. So why is it important to use an intermediary?
So the regulations require you use an intermediary, someone that's an independent party. And in order to be qualified, we cannot be an agent of the taxpayer or the exchanger. So in the past 2 years, we cannot have been their real estate professional, their attorney, their accountant, financial advisor, close relative, employee, or a partner. So we're truly an independent party. And that qualified intermediary is really going to make it easy for you to do 1031 exchange. The qualified intermediary will prepare all the necessary documentation. They'll coordinate with you on all the closing details. They'll work with you and the closing agents, whether it's a title company or an attorney, escrow company. They will also keep you aware of all the time deadlines, and they will hold your sale proceeds in what I like to refer to as direct deposit for the replacement property. So we'll set up a bank account with your name and social security number attached to it. And then when you need an earnest money deposit, we can release that for your earnest money deposit and then wire the rest of the funds for your purchase. But the qualified intermediary needs to be in place before you go to closing to transfer your old property to your buyer. We can do it all the way up to I'm sitting at the closing table, or someone's in their car now driving to the closing table. We can make it work. But if you just left closing, it's too late.
Right. If I've already closed, if I've already have that check in hand from selling that property, it is too late. It is impossible to do 1031 at that time.
That is correct.
Right. Because the whole idea is that I can't take that profit. I cannot obtain that money from that sale. Correct?
That's exactly right. And the other advantage, or one of the things to be thinking about before you sell your old property is thinking about what you want to buy. Although we're seeing real estate transactions slow down just a little bit, it is still one of the craziest real estate markets any of us have ever seen and will likely ever see in our lifetime. But
that's 30 years of experience talking. I just want to point that out to our listeners because Margo, like you just have really been in the industry for so long. So to even hear you say that, right? I'm not hearing you say, oh, back in the 90s, it was crazy too, just like this. You're really saying this has been the craziest.
No, we thought 2005 was a point we'd never get to, and we blew by that in the first half of 21.
Gotcha.
But what I would remind people is start looking for that replacement property really early in the process. You can enter into an agreement of sale for the replacement property, and that doesn't affect anything. What matters is that you schedule your closing or the transfer of your old property to the buyer before you take title to that new property. So enter into an agreement of sale. It makes your timelines a whole lot easier. From the day you transfer your old property to your buyer, you'll have 45 days to identify your new property, and running at the same time, you have 180 days. And they're based on calendar days to close. Yes, I'm sorry. But they're based on calendar days, not business days. And you don't need to have a signed contract in order to identify it, but you have to buy something you identified. So if you send me a list before midnight on your 45th day and it's not under contract, realistically, there's a much greater chance of you not getting it than getting it. And you had to buy something you identified. So work really hard. And once that property is under contract, make that your job to start looking for that replacement property, because you usually have 30, 60 days before closing once you enter into your agreement of sale. So use that when there's no time clock clicking to narrow it down, get something.
I was say, so that's one of the things that I feel like when I've looked into 1031 exchanges before or spoken to other people that have done them, that's always kind of the biggest stressor is this time clock. Absolutely. So let's break this down so that way and really understand what that workflow looks like. So I'm thinking about selling my property. When I start thinking about selling my property, I'm going to talk to my accountant, then I'm going to call you, Margo, and an intermediary to have that conversation of what I can do, right?
Yes.
Now, my house goes on the market. As soon as I get into contract on the house I'm selling, I should start looking for that property that I want to identify, right?
Yes.
I sell my house, whatever that looks like. I do not touch money, do not collect $200, do not pass go. It goes right to the intermediary. And in that time, I have then those 45 days from that closing to identify a property.
Yes.
Now, identifying a property does not mean that I have it under contract. So can I then have more, can I identify more than one property?
You can. The rules
Okay.
say you can identify up to 3 properties, regardless of their combined value. And
Okay.
there's a crazy rule that says if you want to identify 4 or more, all 4 or more together can't equal more than 200% or twice the value of the property you sold.
Gotcha. So I can now identify 3 properties, but once again, we have to be careful with that in this market, with just how
Right.
fast things go and the fact that we're not going to get every property that we put an accepted offer on. If I identify 3 properties, but then yet I find out within my 45 days that I didn't get one of them, can I put a different one in to identify
Yes.
it?
You have
Okay.
until midnight of the 45th day to change that as many times as you want.
Perfect.
So we make it
Then,
super easy. You know, on your identification form, there's a check the box to revoke all my other identifications. Use this one.
gotcha. And then after I've identified those properties within those 3 properties, sometimes 4, within those 45 days, I then have 180 business days to
So
close.
the 45 and 180 are running concurrently.
Ah,
So
gotcha.
after your identification, you have another 135 days. So
Business
total
days.
of 180 days. Yes.
Gotcha. Okay. So really that time starts clicking once at that closing of the property you're selling.
Yes.
Gotcha. Okay. So that's why it sounds like it's a lot of moving parts at that time. And it sounds like really you as the intermediary are that point person. It sounds like then you also work with those other, with the other people involved in this. So it sounds like you also work with some of the lenders, the title company, everybody kind of seems like they need to be on the same team working towards the same thing
Yes,
here.
absolutely. We work with all of the other parties to the transaction.
Gotcha. And that's something that I, as the investor, kind of make those introductions saying, hey, Margo, my intermediary, here's Brad, my mortgage lender, here's Michael, my realtor. I put you guys all in touch, right?
Exactly. Exactly. It's super easy. And once you make those intros, we're going to run with everything.
Right. And this, once again, this listeners, it's why it's so important to make sure to have a good team, to get those communications in place and have people that can work together really well. Because once again, when we're on tight timelines like this, in this market, 180 days can definitely go fast. And what's more important is those 45 days
Absolutely.
are going to go fast, especially since you have to lock in those 3 properties that you need to identify by midnight of that 45th day. So I like the idea of everybody really being in touch and working towards that same goal. Now, we have other episodes on our podcast for some of these other service providers that our listeners have gone and heard about how to be able to identify and find a great realtor, a great mortgage broker, a great commercial lender. So ladies, if you are looking to build your team, please do go make sure to listen to those episodes. But Margo, let's talk about how to identify a good intermediary and how to avoid a bad one. So I always like to start with the positives. How do I know when I'm talking to somebody that they would be a good intermediary for me to be able to work with? What questions can I ask them?
So I would start with how they make you feel. Are they answering your questions? Are they just telling you rules, or are they trying to help you solve a problem? And you want to ask some questions about how their funds are held, because some states have some rules that talk about what I can or can't do with your funds, but not all states do. So you want to make sure that the qualified intermediary that you're working with is going to set up a separate bank account for your funds. And you want to make sure that if they have 1,000 clients, all of their money isn't pooled together. So you want to look for,
Yes.
it happens. So you want to look for a segregated bank account. You can ask if you can see that account on the bank's website, or if you're going to get any statements from the bank. You want to determine how responsive they seem to you. And you could look to or inquire into whether or not they have certified exchange specialists on staff. So unlike a lot of our allied professionals, our industry is largely unregulated. So back in 2003, the 1031 Trade Association, the Federation of Exchange Accommodators, launched a national certification and continuing education program. So we wanted to give real estate investors and their advisors a way to evaluate qualified intermediaries. So someone who holds that certified exchange specialist designation has demonstrated through independent third-party testing their knowledge of 1031 and his application. So I would always suggest looking for somebody with those certified exchange specialists on staff, and ask about insurance, make sure they have a fidelity bond, make sure they have their E&O coverage, and listen to what the qualified intermediary is saying about, hey, let's upload using your social security number. Let's upload it using a secure link, and don't just send me a text message with your personal information in there. You want to do it really securely. These days, we live in a crazy world where emails could be hijacked and that information could get out there. So, look at the safety protocols in place they have to protect your funds.
Right. See, and that's something I'm really happy that you mentioned that, because I think that those are things that I would not have thought to have asked. And I love knowing that there is a certain type of certification program that I can ask for. And I love that you also mentioned insurance. I feel that is a question that we do not ask our service providers enough on if they have errors and omissions insurance and what other protections they have in case a mistake is made. So
absolutely.
Margo, those are great things to bring up. I appreciate it. And most importantly, the first one that you said, I really respect. Just saying, like, how does this person really make you feel? There could be somebody out there that could be absolutely the best at whatever it is that they do in their industry. But if we don't like them, if they don't make us feel good, if we don't want to talk to them, they should not be the people that we should work with. We can absolutely find somebody that is great at what they do and are good humans, and we should try to find them to work with. So I'm happy that you brought that up. So let's now flip the coin here and say, what are some red flags that when I'm talking to an intermediary that I should get a little concerned and think maybe this is not the right person to work with if I hear them say?
Sure. So I would talk about responsiveness. When you call, does somebody answer the phone, or do you just go to voicemail all the time and they'll get back to you eventually, even to take your initial inquiry? And something else that I would, I'm sorry, I lost my train of thought on that one. I should have jotted it down.
No, that's okay.
But responsiveness, and also, that going back to that insurance, not everybody has a fidelity bond, and we could use a strategy called a qualified exchange account, which is a three-party agreement between the qualified intermediary, the qualified intermediary, the bank, and the exchanger. And it will require the exchanger and the qualified intermediary to sign off to approve a withdrawal. And the bank actually controls the funds and moves those funds around. So if you're looking at insurance and someone says, well, I only have I'm making up a number, $250,000 fidelity bond, and you're thinking, oh, I have $1 million that you're going to be holding, you could look for a qualified escrow account that are usually offered at no additional charge, and it just provides that additional layer of coverage. And what else I would look for when it comes to a qualified intermediary is really just, their knowledge. Can they answer your questions when you call?
Right.
And they always have to get back to you? Then, after they're doing their Google searches and their research. So remember, when you enter into a relationship with a qualified intermediary, you have 180 days to wrap up your transaction. So you could be stuck with them for, 6, 7, 8 months, depending on how long your transaction is going to last and how early you started working with them.
I like that idea of, and you're right. When people do kind of say, "Oh, let me get back to you," it really makes you kind of question if they know some answers. I'm picturing them be like, "Sure, let me hold on 1 second, please," and they just kind of turn around and they're like, "Hey, person sitting in the cubicle next to me, do you know the answer?" And then I'd be like, "Well, you know what? I really want to work with the person in the cubicle next to you." Especially when we're on these deadlines, we need somebody that's going to not only be that responsive person, but a person that's going to give us those answers that we need. Totally understandable to not know absolutely everything in the world. But
Right.
we really, when we're on a tight timeline, we can't wait for somebody to kind of go through the chain and play the telephone game to get an answer that really
Right.
should be something that role should know the answer to pretty
Right.
much off the bat.
Right. And Becky, the last thing that I would note is probably something that people would initially think, oh, she's crazy for saying that. But a really low fee to act as your
Right.
qualified intermediary is a red flag, because it is a
Ah,
really time uh, intensive process. And it's expensive to pay for all those insurances and to be a member of our trade association, get our education. But if someone is not charging a fee that you think would actually cover all of their expenses, then I would be concerned about what they're doing with my money, right? How
right.
are they making money off my money? How is that working? So,
Interesting.
a low fee isn't always a good thing.
Well, let me then ask you that. So I guess this is kind of a two-part question. One, so it's the investor that pays the intermediary for that service. And then what would be an average price that I should expect?
I would say they vary, depending on the region of the country you live in, and
Right.
but I would say between 1,000 and 1,500 is a typical fee for a
Okay.
1031
So it's
exchange.
not, I wasn't sure if it was something that was based on the sale price of the house, what the deal actually was, if it was something like that. So there is really kind of that flat fee. But that, and yes, definitely
Right,
depends, depending on your state, depending on your
right.
location.
And the
But
type of
that gives us an
property,
idea.
right? So if you're selling a property that is $500,000, well, we're going to charge you a little bit differently than if you're selling a property that's $34 million.
Right.
It's not going to be a huge difference, but there's going to be a little bit of a difference there.
And once again, there's different work that goes into it. For example,
Absolutely.
my home inspector or anybody's home inspector, it's if there's a single family house and it's 1,200 square feet versus a 4 family that's 10,000 square feet versus a 30,000 square foot mansion. Clearly, there's gonna be different prices. It's not okay. Check the
Absolutely.
box. This is one home inspection. Different work and different time goes into those things, but that definitely helps, Margo. Thanks by giving us that range. Just
Yeah.
when you kind of talk about like if a fee's too low, same thing. If somebody's like, "Yeah, I'll do it for $50," that should definitely throw up a red flag for us.
Right. And you know that if you're talking to a property manager or you're talking to a real estate professional and they tell you, hey, I'll sell your place for $750, and you're like, wait, what kind of expertise am I getting with this?
Right. Right. No, absolutely. So then now that we kind of have that idea of what we should be looking for within the intermediary and how that workflow really works, what can I do as an investor to make your life easier and help make that process easier?
I would say the best way to make our life as the qualified intermediary a little easier is just letting us know about your transaction once you put your old property under contract with the buyer. Because there's a title or an escrow company, an attorney somewhere that's starting to build a file for your closing. And we want to give them as much notice as we possibly can. And I want to make sure that we can prepare your documents and send them over to you so that you have time to review them before you're going to sign off on them. We're going to send you a DocuSign, so it's super easy, but I want you to have a chance to read through it and know exactly, what the process is. and come back to us with any questions. And it also lets us start talking to you about replacement properties earlier and make sure that you have that bug in your ear. Start looking, start looking.
Right. No, Margo, I absolutely love that. And I encourage all of our listeners to always start building their team sooner than later. We need to get that information up front. We need to find the right people to be able to work with, but just being able to have that conversation of saying like, hey, what should I be looking to do in the future with this is just so valuable. So thank you for coming on today. Anytime we start talking about tax strategy or some of these more complicated creative financing workflows, it gets kind of complicated. And Margo, you've done such a great job of just breaking down what we need to look for, what we need to do, and how this can benefit us. So, I mean, I could definitely see your experience from 30 years coming through and just the way that you walked us all through this process today.
Thanks, Becky. I will say one of the biggest things when I first started doing this, our company had a ton of literature that was all written by CPAs and attorneys. And I thought, what the heck does this say? Like, what is the process really? And I really made the conscious effort over the years to simplify the process, because it does seem overwhelming if you say, oh, well, just read section 1031 of the Internal Revenue Code. But if you don't understand it, you're not going to take advantage of it. And it's not as complicated as it seems. So, if we could make that process easier so that you could really harness the true power of 1031, then I've done something good today.
No, absolutely. And I think our listeners, we need to have as many of these tools in our toolbox ready to be able to deploy when the situation arises. So, Margo, thank you so much. This has really been very helpful. I will make sure to put not only the phone number that you mentioned earlier down in the show notes, but I will also put your contact information there just in case anybody, and really Margo works with women nationwide. So feel free to reach out and get some more information about what you can do with your property if you're planning on selling, and make sure to do it sooner than later. So Margo, thank you very much for being here today.
Thank you, Becky.
Of course. Now, for all of our listeners out there, do make sure to hit that subscribe button if you are listening to us on YouTube or wherever you are listening to podcasts. And please do make sure to leave us a 5-star review wherever you listen to podcast episodes. Also, we release new episodes every single Tuesday. So I look forward to seeing you next Tuesday for the next episode of the Lady Landlords podcast.
Thank you for listening to today's episode. If you're feeling stuck in your real estate journey, visit lady-landlords.com/roadmap to book a one-on-one workshop with me. I'll help you determine your next best strategy. Or you could subscribe to our newsletter for exclusive tips and offers. Invest with confidence. Become a lady landlord today.